Na na na, gonna have a good time. Na na na, gonna have a good time. Na na na, gonna have a good time. Hey everybody, it's Joe Dungan with the opening remarks before the lengthy remarks. Uh, Welcome back to Joe Dungan's Talk Show. This is Joe Dungan's Talk Show number 2. It's episode number 2. When I say Joe Dungan's Talk Show number 2, I'm not making a commentary. I'm just saying it's episode number 2. And this one went pretty well. I'm liking doing these so much that suddenly I don't even want to do stand-up anymore, which I know is some of yours dreams come true. But I don't know. We do a lot of things, which leads me already. I'm going off on a tangent. It's been like 12 seconds. There was a woman whose name I've already forgotten. She has a TEDx talk about multi-potentialites. These are people who do a lot of different things at once. And it's a 12-minute TED talk. And in that 12 minutes, it changed my life because now I'm not nuts for doing all these different things. I do a lot of stuff and I can't contain it. I don't want to do one thing for my whole life. And this is a legit thing because there was a TED talk about it. And if they do TED or TEDx, the porny ones, whatever the TEDx means, that means it's legit. So don't at me with the TEDx talk about the tooth fairy or whatever. I know somebody out there is going to be the jackass who does that. Just don't. The rest of you are not jackasses, and I appreciate you watching this far. But this is the one I'm talking to Todd Clift. He's a guy I've known a long time. I think I can call him a friend now. It's been a long time. If we lived closer, we'd hang out. I'd take him to the airport. He and his wife run Moonstone Cellars, which is a fantastic winery on the Central Coast in Cambria, charming little town before you get to the Hearst Castle. If you like wine, I highly recommend hanging out there for a tasting. Buy a bottle or two. He's got some great stuff there. I don't think I'm overstating it when I say there's a wall of ribbons, if I remember correctly, literally a wall full of ribbons that they've won over the years, entering different festivals and such. So we talk about some stuff because I was there last Saturday and found out he was a hedge fund manager. And I'm going, wait a minute, what? You were a hedge fund manager? And then I got an idea. I want to talk about this because the whole GameStop thing, that was a thing. Everyone's got opinions. I'm going, he would know. So he talks about it. He talks openly about it, about his time as a hedge fund manager, how he became a hedge fund manager. That's a crazy ride. And now he became a winemaker. And we talk about the multi-potentialite woman whose name I forgot, Emilie, Google it. And we both feel better about that because he's like that too. He does a whole bunch of things at once. So, but luckily, he has a wife to rein him in. That's a nice regulatory system going, no, stop it. I don't have that. That's why I'm all over the place. It's really a good thing I don't use drugs. I think this would be such a bad situation if I did. But this is interview number 2. I think it's pretty good. It's got a few problems. The audio's a little imbalanced. On his end, he's a little loud. I didn't realize it at the time, but then I played it back going, oops, he's a little loud. I could have painstakingly gone over it, but I didn't want to. So, forgive me, you've heard phone interviews where the one person is, and then the interviewer's loud. It's like that, except not as bad. So you can live with it. I'm sipping coffee throughout the whole thing. I got to figure that out. Can I not go 45 minutes without sipping cold coffee? That seems like a dependency. Also, hey, what'd you think of the opening credits, huh? Weren't those a kick in the shorts? Did those myself. Never had one lesson on Canva. Figured it out. I don't think I'm going to keep them, but I wanted something. So if anybody has any thoughts on the opening credits, I welcome those. Also, I have a new background. Not this. This green thing I've had. I use this a lot, but I put a new picture on the thing. I wanted to get a talk show. They say visualization is everything. So I wanted to get a screen, something that looked like I was on a talk show set, but I couldn't find it on royalty-free photography. So I settled for furniture. I just Googled furniture, royalty-free furniture, and I found a set that looks really nice. It looks like a very nice Manhattan apartment. I said, fine, I'll just put this on. So that's what we got. And Todd's a great guy, and you're gonna like him. I mean, he's got. We didn't even get into the motorcycles and the guitars. I mean, you talk about a guy who's just done a lot of stuff. But even his beginnings as a winemaker, I think, are amusing. So, you're lucky I sliced 30 minutes off this opening chunk. I went 35 minutes, but I've cut it down to the best 5 minutes. And I'm done talking about it. So here, please enjoy my interview with Todd Clift. So this is us starting an interview. I guess, I'm priming myself to take over for Conan O'Brien. And I think this would be easier for me if I had a band and an announcer. But
yeah, it's all about the intro, really.
It totally is. And, we've just entered with a damp squib. Shows you what a professional I am. Hi, Todd. How you doing?
Yeah, we're hanging out, Joe. It's good to see you.
Likewise. Thanks for joining us. Todd, as I may mention in the intro that I'm video recording later, because I don't know if I'm going to say it, your thing now is that you are the co-owner of Moonstone Cellars, a fine winery in Cambria, California, on the Central Coast. And you've been doing that for how long?
Let's see, we got bonded in 2003. So that's when we were official with the government. That's when they started pulling taxes anyway. That's how I remember it.
That's when Pinocchio became a real boy.
Yeah. Otherwise, it was pretty much garage hooch that got poured out in the local valley, and we'd get the deer drunk on the mistakes.
You seriously would just you started experimenting with grapes and saying, well, let's try to make our own wine in the garage and see how it turns out?
Oh, it's worse than that. We experimented with fruit. I mean, we used blackberries and apricots and bananas. I mean, if it had sugar in it, we'd ferment it, man.
It was just like a still. It was just mash and potatoes and
pretty much made alcohol. I always say that if I ever find myself incarcerated, I'm gonna go, okay, guys, wait, hold on. I'm a winemaker. Here's what I need from the kitchen. I'll make this stuff for you. You leave me alone.
Yep.
Deal?
That will serve you well.
I'll have to go back to my old homemade recipes. And yeah, that was back in 95.
Wow. Yeah, we should all have prison chops. That's what I say. Get ready for
you never
prison,
know.
because you never know.
Yeah.
So you started doing that, and then at a certain point, what was the trigger inside of you that said, we can do this professionally? At what point did you say, let's go legit here?
I did work for a winery for 5 years. And so it helped me to see all the agony that they would go through in the winery, in terms of everything from the taxes to staying up late at night at harvest and selling the wine. And I decided one day, insanely, hey, I can do this. I can sell this stuff. I can make this stuff. Why am I helping these guys out? So, foolishly, like most entrepreneurs, it's like, I can do this. And then before you know it, you've got bills and customers, and all of a sudden you're going, I want to go back to working for them. That was easier.
Right. But, you say foolishly. Is there any entrepreneurial venture at all in life where the path is just laid out before you and the street paved with gold? It seems like everybody who tries some entrepreneurial venture has to go beyond what the average 40-hour-a-week worker does. They got to stay up late at night and work weekends and experiment with things and fall on their face a few times. I don't think there's any entrepreneurial venture that's easy.
Oh, I would agree with that for sure. This is actually my third attempt. The first two did fail. So I have a history of going to work for the man and then going, I'm going to stick it to the man and do my own thing. And then all of a sudden I realize I ain't all that. I got to go back and work for the man. I worked for small companies, big companies. Then I would strike out on my own again. And this is the first time it's really stuck.
Well, speaking of working for the man and past ventures, you said something. I was up there over the weekend, Saturday. I was at a wine tasting. And your Zin, by the way, as our friend Mike Green says, is killer.
Yay.
Yeah, killer Zinfandel. If anybody get to the Central Coast, have some killer Zinfandel at Moonstone Cellars. You mentioned, we were talking about GameStop and the GameStop thing that happened a few weeks ago. And you said, oh yeah, I used to be a hedge fund manager. And I almost fell out of my chair. I'm like, wait, what? You used to be a hedge fund manager.
That was one of the go out on my own gigs. Yeah.
Okay, so we're going to get to that in a moment, but let's start at the beginning. You were from Bakersfield, correct?
I am from all over. I spent my formative years.
Careers, multiple cities born in, of course.
Yeah, I went to 7 different elementary schools. That's how much we moved around when I was a kid.
Military brat?
Pretty much on the run from the law. In the middle of the night, there'd be sirens and lights, and Dad would go, 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 go. And we'd run out the back door into the woods and, land on our feet.
The adrenaline keeps the radar on. It's important for a child to be in a constant state of anxiety.
This is the history that you need in order to be a semi viable entrepreneur.
Yeah, I would think so. So, and then you went to college, I presume?
Yes. Yeah. I went to my illustrious local community college for 2 years, and my parents made the bad decision that they said, if you get good grades at a community college, we'll send you to wherever you want to go. And that's when I stuck a pin in the map in Malibu and went to Pepperdine, and I stuck it to them for the private college on the beach.
Well, you could do worse. It's a nice place to go to college.
It is. It's a little religious, so that made it easier to have more of those rebellion years. It was kind of fun to get away with things there.
Did you get in trouble in college for being agnostic or secular?
You didn't dare miss convocation on Mondays. They would literally take a picture of the entire audience, and if you tried to skip out on that service, you had to do daily chapel for a while.
That sounds more than a little religious.
Yeah, I don't think people realized it. That shining modern place on the hill, is steeped in some history.
I did not realize it was that religious. I just thought, oh, it's that nice place, the giant lawn you drive by when you come down Topanga Canyon and head up the coast.
Yeah, but if you play your cards right, you can have a really great time, and I think I did.
Well, it sounds like it.
Oh,
and
yeah.
then hedge funds. How did you get into hedge funds?
Okay, so here comes a whole circular thing. Like I said, we'll see how fast I can do it. Graduated from Pepperdine, went to work for State Farm Insurance. So there's a big man right there. Then I struck out on my own and did an employee benefit plan company. And then the laws kind of changed a little bit. And so then insurance companies, I found a little loophole to, help out those small businesses and employees to, now we all do it. It was called a 125 plan. And it was a way to get all of your benefits tax-free. Now they all do it. So I got aced out. It was like Microsoft buying that little app company, and that's it. It's over. So, but they didn't buy me. So it was just over. It just got wiped out. Then after that, I went to work for a software company. And that was a dream job because I'm a lifelong sailor. And this software was marine navigation software. So boy, that was just a dream job.
Go test it out in the ocean and thing?
Oh, all the time. And we would sell these packages. In the beginning, the only kind of boat that could handle all the processing power needed to have these charts were mega yachts. So I would get aboard like 140-foot sailing boats in Newport, both Newports.
Newport, Rhode Island, as well as so Newport, Rhode Island, as well as Newport Beach, California.
Correct.
Okay.
I was sent all over the country to install these in mega yachts. I never met the owners. I would like, as we would do like sea trials on these boats, I'd ask the crew. I was like, kind of need to use the head. I know you got a few of them aboard. Which one should I use? Because I know
a few of them.
Yeah, but being a boat person and having my own boat, I'm like, nobody likes to clean boat heads, of course, and they all break down. So I'm like, okay, which one should I use? And they're like, yeah, just use the one in the master stateroom. Go down to the master stateroom, which is palatial. It's nicer than any room I will ever have or stay in. And I'm looking at the headboard, and there's a Breeders' Cup trophy. I'm like, oh my gosh! I mean, who owns this boat again? Oh, and it was, I don't know,
wow.
Mr. Keck, who owned like Sun Oil or something.
Jeez.
And so it was kind of a fascinating career to get going in that. And then a competitor stole me away, and that competitor was way into the stock market, that owner of that company. In fact, my first day on the job, he like put a Bloomberg box on my desk and says, I want you to learn the stock market because we're going to trade while you're here. I'm like,
you know what? I just interrupt and talk about how amazing it is that people want you for employment that badly, not because you're you, but because it doesn't happen to me. No one has ever said, hey, I'm going to steal you away to come work at our ad agency. It's never happened. I have never been remotely that important in life. So I'm already jealous. I don't even know how the story ends. I'm just kind of like, this is amazing that someone would find you and say, hey, come work for our, marine navigation software company, son. We'll take care of you.
Yeah,
so that's already fantastic.
Yeah, it was weird. It was at a boat show, and it's like, we'd like to take you to dinner. I'm like, this is unconventional. This is our arch enemy.
Well, that's pretty loaded right there. Somebody walks up to you and says, hey, son, can I take you to dinner?
Like, at least I got a free dinner out of the deal, I mean, I figure, what could it hurt?
So this new company says you got to learn the stock market.
Correct. Yeah. And I'm like, I've always been intrigued. My degree is it was accounting, and then basically my last semester I decided I hate this. This. Well, and I had a roommate who was working for a big 8 accounting firm, and I could tell that it was just going to be an awful grind. They would send him out to like suburbs of Bakersfield, like places like Shafter. You'd be there for a week doing night audits for a Motel 6. And I'm like, yeah, I don't think that's my trajectory. So, but anyway, I had a lot of numbers background. And so I think that was one thing that this guy liked. So after about 4 years, maybe 3 years of working for this company, we actually sold it back to the company that I was stolen away from. So that was just sweet revenge. So that was kind of fun. And then we took those proceeds and started a hedge fund. We took one other person from our company who was the epitome of the best salesperson you would ever meet. And so the partner, so there was 3 partners, the owner of the navigation company, he bankrolled the whole thing. He had a law degree from Harvard and an MBA from Yale. So he had some buddies that he knew that could invest. Very smart guy. I think his head is actually bigger than yours. And
really?
So yes, I know you're famous for that head. That means there's a big brain in there. And I was going with that.
I don't know if it's the brain. I think my head is just a hoarder. I wouldn't necessarily say it's a sign of intelligence. I think it's just hoarding worry and stress and repetitive thought patterns. And I just don't want to let go of anything.
All right. Well,
that's what it is. But I'll take the compliment just the same. And I got to see a picture of this guy.
Oh, I don't know.
We're elusive. We're like Bigfoot. People get pictures of us in the wild. There goes the man with the giant head. And shout out to my buddy Damon Standiford, who's the only guy I know whose head is bigger than mine. So
that'll be a club.
I bow down. Yeah, it's amazing. So you start this hedge fund, and just a little background for everybody. Explain what is a hedge fund and how does this differ from a guy like a broker who says buy this mutual fund?
Sure. A hedge fund is basically a way to pool a bunch of other people's capital so you can trade their money and take a fee for it. It's awesome. It was a really cool deal. So essentially, hedge funds are not as regulated as other financial instruments, and that's another reason why there's so many of them. It's a lot like a mutual fund in the sense that you have multiple investors that are giving you money to then invest it on their behalf, usually with a philosophy in mind that's very specific. I think the term hedge fund came from the very first hedge fund that was developed, and it was truly a hedge against the market going down. So that fund was specifically designed to be short the market. So if you had all of your securities in the market and it went down, the hedge fund would then outperform, and it would then minimize your overall losses, or maybe you would even make some gains off of it.
So people who knew this really well would balance the portfolio in such a way to say that no matter what sector tanks, we got you covered because that fund's going to go up at the same time. And you might not make a ton of money, but you're not going to get ruined.
Correct. And that's, I think, was the initial idea behind these things. It's like, the common wisdom is you just put your money in the general market, like the S&P 500, and it's going to go up, 7 to 10% over time. However, there are those times like, it seems like every 10 years you have a housing crisis or an S&L crisis or a dot-com bubble or a pandemic that wipes out, 30 or 40% of your portfolio. Now, it'd be nice if you invested only like maybe 5% of your money over here, but when those crashes come, that thing makes like 80%, and then it offsets a lot of your losses in your bigger, portfolio.
See, now the concept of a hedge fund, the way you describe it, it sounds pretty reasonable. It mitigates risk. So why are hedge funds demonized? Why do people hate hedge funds?
Well, they do cater to the ultra rich. So nowadays we have a lot of demonization of, populace and class struggles and all that kind of stuff. So I think that's why we're seeing it right now. But so over time, hedge funds did grow. The rules that we had to follow from the SEC, the Security Exchange Commission, it's the government regulation of mutual funds and stocks and hedge funds, like I said, we're pretty loose. We had to have quote unquote accredited investors, which means these people had at least a net worth of over $1 million. And they had to demonstrate that they were experienced investors. In other words, they knew what they were getting into.
I see.
So all of our investors were extremely well-heeled people. So they're all fat cats, basically, that are in hedge funds.
You know,
so if you don't like fat cats, you're probably not going to like hedge funds.
Right. But that calls into question for me this sort of nanny state, you might want to call it, mentality, where like with the GameStop thing, now they're discussing again, it's suddenly too easy for the average person with $100 or $1,000 to start buying stock because they could wipe themselves out. So that argument implies that just because a person's wealthy, they know what they're doing. And I'm sure you've met wealthy people who don't know what the hell they're doing.
Of course. Yeah. I mean, there's a lot of inherited wealth out there, you know, and they don't necessarily have the education or the background of how to manage that wealth.
Do you think it would be fair for hedge funds to open up to middle-class investors, to the average person with only $1,000 to invest?
Well, I think that's where Robinhood like stepped in there and started speaking to those people. When we first started the hedge fund, I think E-Trade was like the very first online brokerage that was offering trading at very low costs. I think they came out at like $14 or something like that at the time, which was just unheard of, because the trades that we were making, like traditionally, you would have to have a brokerage firm that had somebody physically on the floor of the New York Stock Exchange. You would call in, just like the old Fred Flintstones, buy, sell, is that my baby? You know, you would call and you would pay $250 a trade in order to have that, you know, to be able to buy those securities. And as technology has come our way in competition, brokerage has, like Robinhood, have popped up and said, hey, you know what? You can trade for 0 commission fees now, 0. So you can go ahead with your $5 and buy a $5 stock now. So they have leveled the playing field. And then a lot of the big brokerage houses like TD Ameritrade, Schwab, Fidelity, they all had to follow suit right away and go to 0 commissions. So they were one of those disruptors in the marketplace for trading to try to equalize it for everybody. The problem is you've got a lot of people who don't know what they're doing now.
Right. But how does that person, the average person on Robinhood or TD Ameritrade or any of the others, have access to the structure of a hedge fund? Because left to their own devices, a lot of people kind of don't know what they're doing. I'm sure there are plenty of people who play it very safe and say, well, I'll just get my 0.5% interest a year and leave it in savings because I don't know what the hell I'm doing. But
Right.
how would they, because yes, Robinhood levels the playing field, but if you don't know how to play, so what? That's my question. How does a person like that, or do you think a person like that should have access to a hedge fund structure like wealthy people do?
Yeah, so that's where some of the problems have cropped up recently. No, they don't have access to the hedge funds, and I think that's what we saw with GameStop. You saw the quote unquote common man go after the fat cats in a very aggressive way. So no, they don't have access to hedge funds. I'm not saying that they need to have access to them, because nowadays there are really easy ways to invest in themes via ETFs or exchange traded funds,
which are just blends of lots of other things. So those in themselves mitigate risk.
Yeah, back in the day, I mean, ETFs, I think the first one that came out was probably Spider or Diamonds. It was just a bet on the market, right? So it was a computer generated buy and sell algorithm that just kept the balance of the S&P 500 stocks in there at all times. As more money would come in, it would buy more S&P 500. That's it. And now there are thousands of ETFs. If I want to buy, like I own a couple ETFs, like I really like these ARK funds. They're disruptors. You know, one of them just buys disruptive technology. That is this. She's a fantastic manager, and she goes out and does a bunch of research and tries to find the latest and hottest technology, and she invests in those companies. And they might have 20, 30, 50 stocks, and I can just buy it for one, share. I mean, what is it going for? I mean, their prices are like, I don't know, you know, it could be like $50 for a share. And now I own 50 other companies that play on this theme of disrupting technology.
Interesting.
And there's something for that for everything. There's emerging markets. You could buy specific countries. You can buy, whatever. You can even buy what they would call triple leverage. I mean, if you think the S&P 500 is going up, you can buy the S&P 500. You could buy, you know, SPY, or you can buy like a version of it, which takes the, well, I usually use the NASDAQ one. Instead of buying the NASDAQ, the QQQs, you can buy the TQQQs. Now it's triple. So this is financial gamesmanship, or whatever you want to call it, instruments that will allow you to get 3 times the return on that. Now you'll get 3 times the loss too.
Exactly.
If you call
when
it
the
wrong.
getting's good, get in. But if it tanks,
Yeah.
you're gonna lose money a lot quicker too. Now, as
So I
far as
don't think
GameStop,
little guys need to get into hedge funds anymore because there's so many ETFs.
okay, yeah, I regardless of what the climate is like, I think anybody who wants to get into the stock market in any capacity needs to do some of their own research. So yeah, you have to do research even when you pick a financial advisor. Go on Yelp and see how many stars they have, for God's sake. So don't, you know, and this show, by the way, Todd's opinions are they're Todd's opinions. This show does not endorse or unendorse any financial tools. Do your own research and don't send us emails.
You're going to put that in post, right? Because, you know,
I'm saying this now.
I'm looking at my account today, and I think I'm down about $300. So you definitely don't want to listen to me.
Yeah.
And that shows you what kind of peanuts I'm playing with too.
We're going to continue our interview with the expert former hedge fund manager, Todd Clift. Now, this brings me to the GameStop thing. A bunch of Redditors, the story basically is a bunch of people on Reddit got together and they said, let's hammer this GameStop stock. And it reached I don't know if snowball effect is the right word, but when somebody buys a stock, that increases the value of the stock because that's fewer shares available at that price. So if you want you've got to pay the next price up, whether it's a penny up or $1 up or whatever it is. This is combined with something called shorting. Now explain shorting a stock to the layman here.
Yeah, shorting a stock is just betting that the stock is going to go down in price. So, you know, if IBM's at 100 and I think it's going to go to 80, I will borrow a share of IBM with interest from my broker. And then once it goes down to 80, I will go buy a share of IBM for 80. I will return it back to my broker in repayment of debt. And now I've just pocketed $20.
So you can buy as many shares, or excuse me, sell short as many shares are available.
Correct. That is allowed, or that's in my account. Now my broker is going to want to make sure that I got enough money in my account to cover that at some point. Like if I only have, you know, $50 in my account, I can't even short one share of, you know, $100 stock, because they like, how are you even going to buy this back? So, and the higher the price goes, all of a sudden that ratio of my bank account with them and the price of the stock and trying to get it back to them starts to worry the broker.
Yeah, I know they have certain algorithms as far as how much cash you need in and how many shares you're borrowing to sell. So you borrow shares, you sell them right away at 100, you wait for the stock to go down, and then you decide, all right, I've made a little profit. I will buy to cover, return the shares that I borrowed, and the difference is your profit. Now, hedge funds, among the many other vehicles that they employ, they include shorting. So what happened was a number of hedge fund managers, notably Citron and Melvin Capital, I did my research this morning.
Ooh, look at you.
They were shorting a lot of this, and for some reason, they didn't sell it in time. They didn't buy to cover in time. So as it starts to go up, they're losing money. And of course, they've got their eyes on everything they own every second of the day. And I'm sure they have computerized buy and sell mechanisms. So if it reaches a certain point, for example, they call it a stop, right? If you say, this is going up too high, I'm starting to lose too much money, it triggers a stop, and then you can buy to cover right there. Well, of course, once you buy it, as I mentioned a moment ago, the price goes up again, that will trigger other people's stops, and they're going to buy to cover. And then you've got all these people in GameStop in the Reddit, the subreddit, who are all hammering it and buying it. So it just triggers buy upon buy upon buy, and it just rockets to the moon. My question is, how is it that there were any hedge funds that didn't buy to cover in time and lost billions of dollars? How's that possible?
You know, it's just it's a game of chicken, I guess, with those guys. They're like, how many of these little Reddit people are out there that are able to keep pushing this up? And we don't think they've got it to run it up as high as can hurt us. And
Oops.
I think that exactly, they had no idea the force that was coming at them. Dare I say, it's kind of like, you know, the Capitol getting stormed. Didn't see it coming. Here it came. The police force was overwhelmed. Holy crap, this is serious.
So
And I think,
now, so on the one hand, hedge funds, they probably look at this kind of thing all the time. It's like, oh, this is getting bought to cover. People are buying this. Should we? But they have the intestinal fortitude and the capital backing to say, write it out. These little ups and downs happen. Just let it go. But for whatever reason, they did not see this coming with GameStop.
yeah, the whole snowball effect that you described is known as a short squeeze. And it actually happens hundreds of times a year. This one is just a very dramatic one. It was because it played out on social media, it played out in the news, and it did make billionaires out of people like overnight, and then the next day they weren't billionaires again. These big short sellers, they stuck it out and they lost billions of dollars. Like Melvin Capital, I want to say, lost close to $3 billion.
I know they needed a $2.75 billion bailout. That's a
Yep.
bad day.
That is a bad day. You know, I don't like it when I lose $300 and, you know, you add a bunch of zeros to that and it's pretty painful.
Yeah.
Hard to stay in business.
Now, this is the context I was looking for, because what went largely unreported in that story are all the people who made money. A lot of hedge funds got out early. They were shorting it and got out early, so they mitigated losses. A lot of hedge funds bought it. They didn't short it. They owned it. They bought it cheap. And then when it shot up, they sold and they made money. A lot of retail investors, little guys, you know, with $100 or $500, they made money because they were wise enough to get out early. So there is context to all of this. It's not a one-sided story where, you know, a couple of hedge funds got ruined. That said, Washington is already talking about changing regulations. Do you think that's premature?
You know, I think it's premature. I think there's a lot of people that got pissed off for a lot of different reasons on both sides. The way this thing played out was pretty chaotic. And I think where government regulators will look at it is like, how do we minimize the chaos? Because some people got left out. I mean, when a stock starts to move way too fast, there are circuit breakers in the markets, you know, the NASDAQ or the NYSE, to like, okay, everybody cool their jets, because this thing is going too high, too fast, or too low, too fast. We all just need a cooling off period. There was that.
So now the market will actually stop trading.
Correct.
They will prevent anybody from buying or selling it just to prevent this thing from crashing the whole system.
Correct. There was times during the Corona crash that the entire market, not just trading one stock, the entire market, because it would fall like, say, more than 7% in one day, that there would be a 15-second or 15-minute like stop. Nobody could trade anything for any reason. So there's circuit breakers in the market to help everybody like quit being emotional, take a breath, look at what's going on, and then it could drop another 10% and they'll stop it again. So this was happening in GameStop. So that was one thing. You also had some liquidity problems, clearly with Melvin Capital, because, you know, they didn't have the money to cover the short. And then Robinhood had liquidity problems because I think we all know this, like when you cash a check at the bank, sometimes it takes 2 or 3 days in order for that money to actually go in your account. And that's true when you trade stocks too. In the stock brokerage, like TD Ameritrade or Robinhood in this case, basically has to have a certain amount of money with a clearinghouse that makes sure that everybody gets their money. It's like a 3-day escrow or a 2-day escrow, if you will. All of a sudden, you have all this demand for this stock coming in. And it's mostly on the option side, because it's not just buying the shares itself, but it's buying what they call a derivative. Like, I have the right to buy 100 shares of this. Well, where are those 100 shares in case somebody needs to exercise that option? So the brokerage has to make sure there's enough money to cover somebody wanting to exercise that option. Robinhood found itself in a very embarrassing situation where it did not have the money in the clearinghouse to take care of all the trades that were being handled. And so they stopped trading. They took it upon themselves to stop trading. So if you're investing in GameStop, trying to buy more as it's going up, and now you can't because Robinhood's got a problem, now you're mad. And so there are lots of class action suits right now against Robinhood. And this is where government regulators get in, because they're like, oh, you know, you big fat cats in Wall Street, you brokers, you hedge funds and all that, you get your protections, but now the little guy, when they're trying to make money at the same game, you choke them off.
Right.
That's where you're
I can see
you're going to see.
And I'm not trying to side with Wall Street, but it seems to me that mechanism, it should be in the fine print when you sign up for Robinhood. Not that we read that, but it should be there. Look, if things go haywire, we have the right to freeze things for 15 minutes. And number two, you can get out before things go haywire.
Right. And so this is where Robinhood is also going to come under some scrutiny. Did they offer up the fine print? Did they extend credit to people that weren't qualified for that credit? Did they extend options trading to investors who did not have the education to that? Whenever I sign up for like a new brokerage account, you want to trade options, you have to fill out quite a bit of paperwork to show that you are qualified to trade options and that you know what you're getting into. There's a lot of chatter around Robinhood didn't care. They were just trying to sign up as many people as possible. They're kind of like this, I don't know, Netflix model or Amazon models. Like, let's just get the people in. Let's get the people in so we can go public.
Because now Robinhood makes their money. They don't get a commission per trade, but they make their money. Don't they resell everybody else's investments to other brokerage houses?
Correct. And that wasn't disclosed early on either.
Oh,
so in other words, they sell your trade to a market maker, and the market maker has a bid and ask price. And so they actually buy it from you at, their bid price, but then they ask, anywhere from pennies to dollars more. And that's how they make their money. But Robinhood was selling those trades to, of all people, mostly Citadel, which is the fund that bailed out Melvin. So the whole thing is starting to look really weird and cozy. And this is again where the government gets involved and go, whoa, wait a minute. Citadel is making a fortune on all these trades, so much so that they can bail out the very hedge fund that made a huge mistake. But that mistake that hedge fund was making was also making billions for Citadel.
That's really incestuous.
It's crazy.
Yeah. Now,
so there's a lot of moving parts.
Yeah,
a lot of
there really are. This is going to beg for some kind of follow-up later on. Something else I want to get into also is how Redditors themselves are getting scrutinized, because it seems to me the big thing that everyone's mad at is that there are so many of them, because there's no, if you and I get together and crack open a bottle of Killer Zinfandel available at Moonstone Cellars in Cambria, California, and we start talking about investments, there's nothing wrong with that. We're just two guys sharing notes. But at a certain point, if there are large enough number of people comparing notes, and they're all starting to invest based on those notes, invest the same way at the same time, I guess it reaches such a large amount that other people notice and they say, you're having an outsized effect on the market. Do you think that should be capped at a certain dollar amount or a certain number of people or something? Because now you're just kind of playing God. Because how do you say, no, you've invited too many people to the party? I mean, isn't that what everyone's arguing about right now?
That's another one of those issues. I could see where if I was that hedge fund, I would start arguing for regulation against collusion, because I got hit by it, right? I could see them, appealing to the SEC going, hey, this wasn't fair. We got ganged up on, when the fact was they were ganging up on GameStop. So it's a den of thieves, it's pretty.
So I guess the argument is that collusion can happen even among large numbers of people, because when we think of collusion, we think of small numbers of powerful people. For
Right.
example, the price of gasoline, maybe that's a collusive conspiracy among the major oil companies to keep it roughly the same price. The cost of airline tickets, the cost
Right.
of internet service, maybe these are all collusive conspiracies to keep the prices together. But when
Yeah.
hundreds of thousands of people on this, or however many thousands of people on Reddit all got together at the same time, does that count as collusion?
Yeah, as far as I can tell, no. Nobody made any, even though it all looks horrible, I don't think anybody broke the law here. And that's why, you know, what do our lawmakers do? They just react to things, right? They never proactively come up with a great idea. They wait until enough people complain about something. So, and this is what's happening here. So you're not allowed to do certain things. And I don't think any of these things happen. Like you can't, quote unquote, pump and dump a stock.
But
I can't go on.
Well, now wait a minute. Isn't that when only an authorized licensed broker does it, so they can benefit later if they're offering illegal
Definitely
advice?
illegal for them to do it. However, I think even as an individual investor, you can get in trouble for doing that too. Just like an individual investor like Martha Stewart can get in trouble from hearing some inside information and acting upon it. I also know that if I'm sitting on a big position here that I know is dubious, and I go and bang the table in social media rooms with the intent of selling it, going, and it's hard to prove,
How do you prove that?
but that's one. The other thing is a lot of GameStop insiders, executives and insiders made a lot of money selling their shares, and that tends to tick off, shareholders, and because that drives the price down, because they hold executives usually hold sometimes millions of shares.
Right.
And so when they dump,
you know,
it really hurts.
Right, but when you're a guy or a woman holding a bunch of shares and you see the price go up, it's a reasonable argument to say, I'm going to lock in some profits and sell some or all of my shares. So I can see the frustration, but that's the way the game is played.
Exactly. And so these insiders aren't in any kind of trouble at all, because this was an outside influence that drove the price up. It wasn't something the insiders knew, right? It wasn't like they knew that the books were cooked, or that they knew that something was wrong in the company that nobody else knew, and they started dumping shares before it got out to the public. They didn't do that. All of a sudden, they just saw the price go up. They were probably scratching their heads, what's going on? All of a sudden, the CEO woke up one morning and he was a billionaire. Now, the next day he wasn't, but at one point, his stock, he owned 20 million shares or something, and it made him a billionaire.
Yeah,
but if he could have sold right then, he would have been a billionaire.
Right, but there's a certain side of anybody with a certain amount of caution or common sense saying, this is shooting up dramatically. Maybe I should sell some of it, because in my little amateur trading world, as soon as I see a stock go parabolic, my first thought is, this could plummet just as quickly. I better get out now.
So it just depends on what side of fear and greed your brain is at that moment. Well, people do not act rationally. So once things start going wild like that, it could go up to 1,000. I don't know. I'm going to wait and see.
Based on where my career is, I'm on the fear side. If I had any sense, if I were smart enough to be greedy, I'd be a lot further along in life by now.
That's funny.
How many Super Bowl rings I'd have. How many yachts I'd own, how many toilets in those yachts. I'd have a yacht head guy. Yeah,
more Breeders' Cup trophies, the whole bit. Sure.
One more thing on this that I want to point out that I found this out. Wall Street Bets is a subreddit where apparently a lot of people found this information. Number one, it's been made private. I don't know who made it private. I presume the admins did it. And number two, Discord. Discord is a platform where people can start communities. Discord has banned Wall Street Bets from its server. Do you think that's overkill?
Probably. I mean, I know one of them had a problem with some hate speech in there, and I think that's why they got shut down for a little while, and then reopened and said, okay, I think it was on Discord, and said, your admins need to clean this up a little bit, because, it turns out head of Melville Capital is Jewish, and so there's a lot of anti-Semitic remarks being made, and that wasn't cool, and so it got shut down, and as it should. So when things get personal, it's not right. So I'm a bit of a dinosaur. I'm not much of a social media guy, but I do believe in free speech, and I don't believe in hate speech. So hey, everybody can talk about whatever they want as long as it doesn't, I don't know, incite riots and harm people. So I don't think there should be anything clamped down on those wanting to talk stocks.
Yeah, I don't think so either. It's odd how I think once it reached a tipping point of too many people, that's when someone else, whether it's an admin or some Wall Street guy, they all lose their minds going, wait a minute, this isn't cool because we don't mind you making money, but you're making too much money. So I don't know. It's
Well,
all to be
it,
continued.
it, right. It's a new thing. This is like another disruptive force out there. These hedge fund shorts didn't see or underestimated the power of the social media mob and came up literally short
Right. Yeah.
on their bet.
This time, but I think they won so many other times. It's hard to feel sorry for them. Speaking of disruptive forces, I used to host a comedy show at your winery until the pandemic
Yes.
hit, which is
Oh,
I just hanging out at your winery again Saturday and seeing the improvements you made. You got the landing of the steps has been expanded, so you have room there. And I can't wait for this thing to be over so we can resume the comedy shows, because that's something I look forward to. That's fun. That is a fun Saturday night every couple of months when we do that.
I would agree. It's one of our most sought after events. People, we always sell out your comedy shows, and yeah, I'm getting pretty bored with this pandemic myself. So we can get back to having some fun and get everybody together. And there's nothing like 50 people in a room all laughing their brains out.
Yeah.
It's really
Once I get off the
good
stage,
energy.
I'll
See,
throw in, I'll throw in my requisite Bakersfield joke and then get the hell out of there so I can bring up the real talent. But yeah, those are fun. I am looking forward to those again. And
me too.
this year, I hope it'll happen. I think it will. I don't. I think I think the light at the end of the tunnel is getting bigger, and I don't think it's an oncoming locomotive. I think we're actually getting out of this thing. Todd, thank you so
Well,
much for hanging and chatting and explaining all this hedge fund business. Great talking to you. Great meeting a kindred spirit, because the one thing I found, I'll mention this, a woman named Emilie Wapnick. I found a TED talk from her about multi-potentialites. These are not people who can't make up their minds. These are people who are so good at so many things that they can't keep one career. And I'm going, okay, you just did in 12 minutes what therapists could not do in decades. I felt so much better watching this thing. And then I saw you talked about being a hedge fund manager. You talked about your other careers. I'm going, you get it. Yeah, and it's
yeah,
normal. It's normal to have a bunch of different things going on at once.
yeah, it's good for me to know that too, because my wife just retired from 35 years of teaching. She graduated from college. She got into teaching. She taught for 35 years. And who's laughing now? Because at first I'm going, well, that's kind of like, in my mind, it's like, I don't know how you do that. I don't know how you just do one thing forever. But who's laughing now? She's pulling a great pension. I will never see a pension. When you jump around, you don't get that gold watch. I'm
Right,
just saying.
but it sounds like you two are a great partnership, because it seems like one of the things that she's there for is to say, no, Todd, you can't do 17 things. Let's keep it to 11.
Yeah.
Is that
For sure. I mean,
that balance works out? She knows exactly how much to regulate the Todd industry.
yeah, it's worked out well. I mean, we've been married now, 15, 16 years. So it hasn't come to blows or anything like that. But yeah, she'll find me in the kitchen, like making cheese. And she's like, what are you doing? I'm like, I think this would be, a good thing. This could be a new business or whatever. And she's like, put the pot down, step away from the oven, right? She is just like, I'm not having any of it. And I started reading further about cheese and the molds that you use to age cheese, and I'm thinking this would be perfect for the wine business. In fact, I've got the perfect humidity and the temperatures in the winery. And then I'm rereading the names of these Latin molds. I'm like, that sounds familiar for some reason. And it turns out it's a spoilage mold for wine. I'm like, oh yeah, that's why you never see like cheese making operations in wineries, because it would kill the wine. I'm like,
okay.
I went back to Kenra and said, no, you're right. I don't need to be in this business. But secretly it was because I don't even want that mold on my clothing, let alone ruin my wine. So
You do too many things, it will trip you up. We have that in the comedy world too. It's called writing a screenplay. As soon as I try writing a screenplay, I think, wait, now I remember why I don't do this. It's a big pain in the ass, and there's a 99% chance no one's going to buy this. I'll go back.
Why am I wasting my time on this?
Yeah. I got too much other stuff going on. Todd, thanks so much for hanging and chatting. Really,
thanks for having me. This has been a lot of fun.
Good.
Thank you.
Good. Maybe down the road when the whole GameStop thing gets completely uncovered and untangled, we can have a little post-mortem about that, and maybe we'll do it in the evenings. We can actually get loaded on quality Côtes du Rhône.
Ooh, I love it. That or the whatever, the Killer's Inn or whatever the Mike Green calls it.
Killer's Inn. It's all good. Thanks, man. We'll talk soon.
All right. Love you, man. Can't wait for a comedy.
Yeah, me neither. In my opening remarks, I forgot to beg you to please like, subscribe, and or share. I have to do that. I can't, it should be, and I was about to say it should be automatic. I don't know if that's even true. Should it be? Really? Do we owe that to every single person we watch on the YouTube? I don't think we do. That's why I'm asking. If you liked it, like it. If you want to subscribe and get more of these, please do so. Feel free to leave a comment. I respond to all the comments because I'm not getting very many. But I want to connect with viewers because they say you're supposed to. So please leave a comment. Feel free to share it. If you think there's anybody who will like it, go right ahead and share it with them. And I hope you liked it. I hope I'll be back for interview number 3. Next week is another great guest. I have no idea who it is. I just trust myself. So thanks, everyone. Bye.